As this war lingers on, even though Trump says it's nearing completion, the economic impact becomes even more real. Joining me live now is Westpac economist Pat Bustamante. Thanks so much for your time, Pat. First of all, the inflation story, not just here but right around the world. But what could it mean for us? There are predictions today that it could push up inflation by 5%.
Hi, Laura, and thanks for having me on your show. So it is a big shock when you look at what's happened to energy commodities around the world. And just on what's happened over the last 10 days or so, we've seen the price of oil per barrel increase almost 40%. So last night, it actually spiked at $120 US dollars per barrel. And that's like similar to the levels we saw coming when Russia invaded Ukraine. So that's all going to feed through to prices at the bowser. It's just going to take a bit of time for that to happen. So we're actually expecting the price of 1 litre unleaded petrol to increase to about $2.30 by the end of the month. Mm-hmm. And obviously that's going to have an impact on domestic inflationary pressures. When you just look at the maths behind the increase, so at the moment the auto fuel is about 3.5% weight in the CPI basket. That's increased by about 35% when you look at international global oil prices. So that can have an increase in headline inflation of 1 percentage point. So by the end of the June quarter, we could see headline inflation above 5%. You're right, that is a risk. We think it'll be maybe not as high as that, but it'll definitely be above the RBA's target, which is a concern for the central bank.
It's a tough one for the RBA, isn't it? Because, definitely short-term inflationary pressure here. We're going to see that in the next couple of figures. But also the RBA's got to be concerned about the growth story, global growth here in Australia. And
definitely.
Australia might need, some stimulatory effect down the track.
Definitely. I guess, for our central bank, they've been on this battle with inflation for quite some time. I guess this shock came at precisely the moment they probably didn't want it to occur, but they have to deal with it now. So at the moment, I guess the real risk is we know it's going to hit headline inflation. We know it's going to have a big impact on headline inflation, and that's to come. I guess where there's more uncertainty is what that means for underlying inflation. And that's what the RBA really looks at. And that's inflation stripping away all the kind of big ups and downs over the quarter. So we know price of oil and petrol at the bowser is going to be stripped away. But what does it mean for that broader kind of underlying impulse? So at the moment, we think, potentially it could be kind of in and out. So we get the spike in oil prices, and if oil comes down, we'll see headline inflation and underlying inflation come down. But there is a risk that it's passed on to underlying inflation and domestic prices, and then the Reserve Bank would have to respond. And at the moment, we think that risk is quite low. It gets bigger the longer the war, I guess, carries on. But that's certainly something they'll look at.
It is all about length of time, Pat. Thanks so much for your analysis today. Appreciate it.